Warriors. It's Wednesday, and what a great day to talk to Justin and Trent at Forest Park FX, to become a subscriber for the rest of the summer trading season into the fall, and to put a team on your side. Okay, that's what you want to do, is you want to put a team on your side, not a bad team. Here at ForexAnalytix. Also want to remind you there's a lot of good education on the site, but here's a lineup. Blake trading for one of the best funds in the country. Jello's Greg Horvat, great Elliott Wave guy. I call him the Wizard of Waves. Interviewed him when I was at FX Street. He's won awards there a few years consecutively. Stelios really has a hand on the politics behind currency movements. Steve, one of the most disciplined traders I've ever seen. Mr. Confirmation, I call him, because a lot of us try and get the edge before we know, and Steve is willing to give up, a little bit of a lead to have a higher probability trade. That's why his hit rate is so good. I'm the host here, provide some of my analysis, and I know some people have learned a few techniques and psychology from me. Amanda's a great trader, and that's how she supports her daughter. And not many mothers support their family trading FX. So Amanda's a very unique individual that we have with us. And we have Joe. Joe's been appearing on Bloomberg and doing a great job. Not easy to be on camera and look natural. And Joe does it like a champion every time he's on, getting better each time. And Andre, a very good harmonic player, a very nice human being. And he's from Portugal, and his charts are artwork every time I look at it. So when you become a member of ForexAnalytix, it's just not you and one editor, one publisher. You're putting all these man hours and different methodologies to work for you, which include Elliott, basic technical, candlestick, harmonics. So a lot of different methodologies. Want to congratulate Blake on his great call in Canada. He's had conviction there for the last few weeks. And King Dollar. Hi, Rio, how are you? So I thought there was a possibility that this might have been a high to set it up, but now it looks like the die is cast and most likely headed up towards 97 area. We'll still need to close over 50 for that to happen, but taking out yesterday's Friday's high changed the picture for it to be a top that now we need to go up one more time. Maybe that's going to be a 3 up there, but it looks like 97, very doable. So hard to fade the dollar. But if you do want to fade the dollar, what do you look for? Let me coach you. Okay, say you disagree and you think the dollar is overdone here. Don't try and bottom pick something that's making new lows for the recent move, like cable, although I see a 2-dry formation here. Aussie is making a new low, but there are a couple examples. Here was Blake liking Canada at the 131 level in here. Okay, so the lesson being, I kind of compare what we do, what's important with what we do, to a singing competition like American Idol. You could be very talented, have a great voice, but if your song choice is off and it doesn't suit your range, or you don't feel passionate about it when you're singing it, your performance would suffer. So for us, it's always trade selection. So if I said, well, I don't believe this dollar rally is going to continue, then I would look at pairs that aren't making new highs like the dollar is right now. So the SEC is way off last week's high, USD SEC. Looks like it's might try this 61.8 level again, but when you look at it, this could be its second lower high after the third drive, right? Failed here last week and hasn't even come close to challenging last week's high. And another example would be the Swiss. So as strong as the dollar is, Swiss is putting in a lower high right here. So if I wanted to fade dollar strength, these would be the two I would go for because they're underneath this high, which the dollar has already taken out. Everyone with me on that trade selection? And what would you always want to short? The laggards, the ones that are the relative weakness, the weak sisters, and you always want to buy the leaders when they're under a little pressure. So that's the way I see it. I took a shot in gold at 1230. Looks like I was at least a day early. Let's take a look at it with the dollar going up like this. So I tried it on this 3-drive line, and Steve would say, and we call these throwovers. So I would say if gold got back above 1228 and we get back inside this formation, that we have a tradable bottom here in the gold. Silver even a little weaker than gold down here at 1541. But one reason that gold bulls that should give you just a little hope when we were getting hammered yesterday in the gold, some of the gold ETFs like Nugget, I don't know what, we're an hour and a half away from an opening, but gold was down 13 bucks and you actually had Nugget unchanged. So you're getting the beginning of, we're not taking these lows out. So for months and months and months, this was 1360 gold, and then gold got to 1360 here. And look at the shares were underperforming. Now they're beginning to hold up better even when gold's under pressure. Here's GDX again too. With gold under a lot of pressure, you would have thought the shares would have been under a lot of pressure, and they weren't. Okay, and one last thing, we talked, Steve and I talked, I guess I was away, and he was asking about if we had a third drive yet in NASDAQ, and I said it looked like it was a 2, and that we'd get a little pullback, and then one more push, which is what happened, okay? So 1, 2, we had this pullback. Now it looks much more like a 3. I don't know if he's looking at the daily or the 4-hour, but I'm guessing it was the 4-hour. So all the indices are not confirming new highs today. NASDAQ's been the leader. That's not confirming new highs. S&P, look at this, same. And the Dow, the same. And the Dow's been the strength in the indexes. So I'm not declaring today the top, although there is a cycle that Mark Newton made us aware of that markets have been putting in lows at the beginning of the month and highs mid-month, and we're definitely mid-month. So we'll see how the week finishes. I wouldn't be long, that's for sure. In fact, I have some partial longs on in ETFs, bearish ETFs, and added a little last week, and we'll see. I don't think we're any more than maybe another week or two away from a significant top. I'm still in the camp, and I talked about it that we had to clean out 2,800 bulls first. Kind of a negative day. Peter Goodburn was on it with us talking about 28. That's why I bring in people selfishly, so I have some numbers to key off of based on their methodology, especially if their track record's good. I think Greg put out some type of blog yesterday on the gold, which also showed that we're pretty close to this gold break being over. Here it is. Okay, so he's saying eventually 1200. So, you know, this is all the stuff you get, but he's showing this pretty close to complete. I don't know where the 61.8 came in. Maybe Blake knows, 1220-ish. Then he's looking for one more rally, then a break. So don't get carried away with your, you know, bearishness in gold when the Wizard of Waves is looking for that. So with that being said, Blake, great call in Canada. I know you not only helped yourself, but you helped all our subscribers with that pattern in play. Nice trading, buddy.
Thank you. I actually just I picked it up yesterday, the dollar Canadian long, and I sold it this morning at 132.45. So I got out about 10, 12 pips ago. The thing is, we're challenging resistance right now.
That's Dale, another one, Blake. When I was going over the dollar, making new highs and everything. Yeah, Canada's not making a new high. Last week the dollar high was 95.20. It's been to 30 now, to 34, and Canada did not make a new high with it, like USD SEC and Swiss.
Yeah, as far as the Canadian goes, the U.S. dollar Canadian, I think, has had a really nice pivot off of this trendline support. I do think we get up towards 133. You might actually get, some sort of you might end up getting some sort of Gartley pattern here or something like this. That something like this. I'm just throwing. About like 133 level. I think that's possible. But I was just talking to the guys in my office, and by the way, Dale, great analysis on the S&P. You're like, we have to take out stops above 2,800. We did, and matter of fact, the S&P's nearing the 127% extension, and frankly, I think that the S&P looks like we're gonna break back down. Is the way it looks to me. It looks like we're gonna turn around here and possibly head lower. And the reason why I'm saying that is you got the Nasdaq that had this little breakout point. This might end up being a false breakout. This is post Netflix. I mean, it was unreal watching that movie yesterday. But it's
like watching a movie.
Yeah,
the Wizard of Oz.
Yeah, it's like, what the hell? Anyway, but you look at like the Nasdaq, looks like it could roll right back over after taking out all the stops. You got everybody that's obviously really long. You got we're in the summertime where things could pull back at any moment, and I think the question is, does the stock market pull back here, and if it does, well, then the question is, what do you do in currencies? And you take the euro yen, for example. The euro yen had a really big rejection of the 200-day moving average over yesterday. And if you read ForexAnalytix analysis, just go ahead and read the basic analysis from last night. The euro yen continues to grind higher into new trend highs as we approach the 200-day moving average. Oh, no, I'm sorry, yesterday. The euro yen challenged the 200-day moving average and rejected it today, which is setting up a good risk reward for shorts if we turn lower tomorrow. And here we are with a reversal in the euro yen. And the question I've been asking myself is, what the hell am I going to do, or what the hell are we all going to do should stocks turn lower? If the stock market turns lower, do we buy yen? Do we buy, buy the dollar? Do we buy, I don't know. I think the answer to that question is, you look at the commodities and typically, if the market is selling off, and it's not selling off for reasons of lack of growth, but if growth starts to turn, then that's really going to weigh on commodities in the future. And the problem with that is the commodity market is already showing signs of weakness. Well, the commodity currencies are. You got the Kiwi dollar that is it looks very, very weak. The Aussie dollar, and if you read the analysis from yesterday, from the basic technical analysis in the Aussie dollar. The Aussie dollar is now risk of invalidating the possible inverted head and shoulder pattern, which if the 7350 level is broken, new downtrend may start. Well, here we are, 9350, and I think the risk here is that we see continued commodity currency weakness if we have you know, the equity markets that actually roll over a little bit. So, you know, I look at the Canadian, and I still think the Canadian's a great long here. What we are testing right now is the neckline of the breakdown point of the double top. So that's where we're currently at right now. And if you want to know why I took my profits off the table in the US dollar Canadian this morning, it's because we were testing this previous support, which should act as current resistance. So, you know, and you know, that's where we're at right now. And I was long the U.S. dollar Mexican peso overnight, and I still like it. I still like it on the long side. I'm not buying it right at this very moment in time because I sold it at 18.98.50, I think, is where I sold it this morning. I sold it right around here this morning, right around this 18.99, but it was 18.98.50, I think, is where I got out of it. And I like the U.S. dollar Mexican peso. I think the U.S. dollar Mexican peso looks like a great long. This has been a really, really big. Gosh dang it! I don't want to keep doing that. Sorry. This has been a really big pullback following this Gartley pattern, and I have been looking to get long for the last you know, last few days, and I ended up buying it yesterday and selling it this morning because I think I bought it at 18.78, I think, is where I got long. Anyway, I love playing the commodity currencies to the short side. The question is, do we short or do we buy yen at the same time? So in other words, you know, is the Aussie yen a good short? Okay, is the Kiwi yen a good short? I mean, look where we stopped the Kiwi yen. Look, you know, the Aussie yen is still range bound. The Canadian yen, you know, is that a good short? The Euro yen, the 200-day moving average, the pound yen reversed right at the underside of the trend line. Showed us a big reversal. Here's the pound yen analysis from yesterday. If you guys, you know, if you're ForexAnalytix subscribers, you know all of this. Okay, there's your reversal. A big rejection of the underside of the trend line to set up a move lower, especially that we closed below the 148.20 previous resistance from June. All right, I mean, these are all, you know, these are all really good setups that we've had, and like I said, if the stock market continues lower, the question I'm just asking myself is, what do we do as currency traders? And I don't know if I really want to. I don't know if the dollar is going to continue. I mean, we've got the pound that's at new trend lows. The pound looks like it's going a lot lower. And let me just say that we have, and I know I sound like a broken record because I said this yesterday, we failed at a 24% retracement of this move. 24% retracement. That's a shallow retracement. Wait, hold on. Hold on. I want to see if there's any. The U.S. dollar Mexican peso just pulled back quite a bit.
Blake, while you're doing that, hello, by the way.
Hey, Stelios. Hey.
while you're doing that, if you're busy for a minute, I can just add something on the pound.
Yeah.
No problem. For people who are not aware, there were 2 votes yesterday in UK Parliament. One was one had to do with the way that the medicine sector would be treated after Brexit, and actually this is a vote that the government lost. So basically,
can I stop you there and just say, it wasn't so much the vote on the medicine, it was the fact that she got beat by the government. Isn't that it? Isn't that the reason?
Yes, it was a marginal loss, like 305 to 301.
But it doesn't matter. It shows that she could be defeated, right?
Yes, she's very vulnerable, and it's clear. Having said that, there was another vote on the customs union following Brexit, which she won, and that was considered to be the important one. But as you said, it shows just how vulnerable her position is. So I think the new base case for the UK is that Theresa May is going to lose power at some point. She's going to lose the leadership, and we're going to go into elections. I think that's now become the most likely outcome. And with that, obviously, there becomes a lot of uncertainty, because, who wins the next election? Is there a chance that Labour with Corbyn might win? And that would open, a can of worms. So just something to be aware of. And that's one of the main reasons why the pound's just been smacked relentlessly. And it doesn't look like it has any life in it. Now, having said that, we still are in a position where there are just binary events in the UK. Everything seems to be binary. You get something like what happened yesterday, or maybe we get the news that May is stepping down. That's going to be very bad. On the other hand, there's so many things happening, so many decisions being taken, that I know it seems unlikely for many people, but there is always a chance, given what May is trying to do, the direction she's trying to take regarding negotiations with the EU, that there's always a chance that there might be something positive coming out. So I would say be very careful when trading the pound, because it's like a minefield at the moment.
It is. You're right, Stelios, and I'll tell you, personally, I mean, you just look at the price action of the cable, and it looks really bearish. And I will be the first to admit that I tried to play it on the long side down here a few weeks ago. I mean, I played it on the long side actually several times, coming through the 131.50 all the way to 130, 250, and just kind of buying the dips. And frankly, I did pretty well doing it. I haven't touched it really over the course of the last week and a half on the long side, because I was getting a little worried that this inverted head and shoulder pattern that we were looking at was getting a little long in the tooth on, as far from a symmetrical standpoint. So I stopped playing it on the long side about a week and a half ago. Fortunately, before all this had happened, I didn't get caught in any of this action here. But looking at the cable, I think that the door right now is open for a move to 128. I think that that there's 161% extension down here. There's a 618 retracement, the longer term 618 retracement, and it all comes in around 128, 128.50. So I think it's doable. And if you have the dollar strength that we have currently, why couldn't we make our way down there? Why couldn't we push those levels first? It's the pound, any which way we slice it right now, and you're right with the quote unquote minefield that you said. It's still, the price action is very poor in the cable. Now I think that's a lack of confidence, right? I mean,
yeah, and it's like we said, it's lack of confidence, a lot of uncertainty of what might happen today or tomorrow with all these political developments. Plus we had a miss in the CPI, and actually it was a miss in expectations. It actually flatlined at 2.4% year on year, but the expectations were that it was going to bounce back up to 2.6. So all these is like a perfect storm brewing on sterling and cable in particular. So I really, really want to get long cable eventually, not just yet. I was saying in the chat room today that I'm looking at like 128, 128.5. So we agree on roughly the levels, but it will also be a matter of how it gets there and why it gets there. If there's a big negative event, really, if it starts looking really bad, then I will not touch it. So
right, yeah, that's a great point, Stelios. Great point. Well, thank you for your input on the cable, because you know, I think a lot of people are wondering why is it so bearish, and you know, why the price action is so bearish in the cable right now. So thank you, appreciate that.
No problem, Blake. No problem.
Okay, last thing I want to cover before Steve gets here is I wanted to bring up last night's DSI. So if you guys don't know what the DSI is the Daily Sentiment Index. It is a paid subscription that we pay for. It's been, you know, it's been around for, the Daily Sentiment Index has been around for, you know, 30 plus years before I even got in the business, and it's something that it's a survey amongst dealers about, you know, about their sentiment towards these different instruments. It used to be the gold standard in analysis for a lot of commodities players years ago, before the internet, let's just put it that way. But it's still, to a certain extent, I take in the information every day, and sometimes I factor it into the things that I'm doing. When we get into extreme sentiment levels, it's not the COT which is showing you positioning in the markets from the Treasury. This is sentiment amongst dealers, which, you know, when you have a survey, it starts to really show if the market is extreme bullish or extreme bearish. And what I'm always looking at is I'm looking at the far left raw data on the left hand side, and if the number is below 10 or above 90, which you don't see any readings above 90, I don't think. I mean, you got orange juice at 86, and dollar index is at 82, which is getting towards extremes. But you can see the volatility index at 7, gold, silver below 10. That's starting to get my attention, and that means that the sentiment in the volatility is extremely bearish, and sentiment in gold and silver is extremely bearish. And so with that, that means that I need to start looking at, you know, okay, volatility might show a reversal, and you can see we're at a lot of support, which makes a lot of sense. The market's completely complacent. You got the equity markets that are at highs. You know, volatility spikes up a little bit, and that sentiment reverses a little bit. Equity markets will probably come under pressure. That's why I'm thinking, okay, so what do we do here? Do we buy yen? Do we buy the dollar? Do we sell the Aussie yen? You know, those are the things that are going through my head. And then also, really quick, because I know Dale, just before I came on, he was talking about gold and silver, and I think gold, real bearish breakdown, but the 618 is at 12.15, which is not far below where we're at right now. Silver getting pretty extreme down here, and I think that gold and silver can show some signs of reversal where you can start to look at being a possible buyer. And then Dale showed you the blog post from Gregor Horvat yesterday, you know, finding support in gold around 1200 or 1215, the 618 retracement, excuse me. Sorry, I didn't mean to yawn on you guys, but you can see there's a ton of support down here, okay? So to see us, you know, find some support around the 1215 level, that makes a lot of sense to me, especially with the extremes. Now, I haven't bought gold yet. It's trading at 1224. I'd like to see another, you know, 5 to 10 point sell off. I actually would like to see us hit new trend lows here, push to new trend lows, and then I might actually consider playing gold for a bounce. But anyway, that's just something that I wanted to point out before Steve got here. And matter of fact, it is time for me to bring on Steve. Good morning, Steve.
Good morning, Blake. How
are you?
I'm good. I'm good.
Good. I'm so tired because all the time it seems like, because it is so hot and so humid here. We got some housing data that just came out.
Yeah,
housing data came in a little worse than expected, actually, at 1.17 million versus 1.32 million expected. So a little bit worse.
Yeah, a lot worse, actually.
It's a lot worse, actually. And to be honest,
building permits a little bit worse, but housing starts was quite poor.
Yeah, building permits too. Yeah.
And to be honest, we should be expecting that. I mean, you know,
with
one
higher
of
rates.
the yeah, of course. Not only with high rates, with also expectations that rates are going to keep going higher. Right? I'm not saying that's going to happen, but I'm saying that the market expects that rates will keep rising. So you know, it makes sense.
Yeah, and you know, it's been one of the pillars of strength. I know in where I live, we are heavily dependent on real estate, and so and you know, the people that I talk to are, you know, which mostly consists of realtors and people in commercial real estate. They tell me they've been telling me the same thing for the last few months. Things are sitting on the market for a long time. Prices have basically recovered completely in most areas from the financial crisis, pre-financial crisis peak. We're back at those levels again, and everything's just sitting on the market again. So you know, and I get again, we are, where I live is very, very dependent on housing. This is one of the hot housing markets in the United States. So you know, when things are back at levels that, you know, 2006, 2008, 2007 levels, it's a little scary, and everything's just kind of sitting at these high prices, and they're sitting on the market a long time, and rates are going up, so affordability is, you know, what people can afford is coming down, and so I think that we're going to see a continued pullback in home prices.
Which isn't good news because it affects other sectors as well. I mean, it's, you know how it is. It's
confident. It's, you know, for a lot of Americans, and I know Europeans to a certain extent feel the same way, is that your home value is a big you know, a big chunk of your investment and of your retirement for a lot of people. I mean, housing and real estate everywhere, you know. But if you have, like, let's say you have, you know, you feel like you have $1 million in equity in your home, you feel a little bit wealthier. You might be more accustomed to spending some more money. But if, you know, the values drop by a couple $100,000, and you know, you think, oh wow, my real estate has dropped by 20%, that's going to affect the way you spend as a consumer. You won't feel as wealthy. It may not affect, you know, your bottom line on your cash position, but you know, what you see on paper will affect your sentiment, right?
Yeah, having to do with sentiment, undoubtedly, it plays a big role. But keep in mind that in Europe, things in the vast majority of the countries have been very different in the way we view housing. I mean, you know, in the average European country, people do not flip houses. In my opinion, one of the reasons that the US housing market imploded in 2007, 2008 was also the whole mentality that due to the Fed reinflating the bubble after the 1999 crash, was that, listen, your house is an actual liquid asset. You can do mortgages, you can do refinance, and even a lot of people were refinancing by when there were better terms out there, by taking extra money on the mortgage. Sometimes people even got extra money on the mortgage just because the mark-to-market value of the house had increased in between. And you know, we know that, you know, this has its positives, but on the other hand, it has its negatives, and we saw what happened in 2007, 2008, right? So you know, I think people in Europe are a lot more stable having to do with houses, in the sense that, you know, they choose a house, they buy a house, and many of them live for decades and decades, or they even pass it down to their kids.
Yeah, and it's definitely a different mentality in the U.S., and that's why it's so important to watch housing data in the United States, because it will flip sentiment longer term.
Absolutely.
So
absolutely.
Anyway, I think we need to keep an eye on you know, gold. The dollar's had a nice move. You know, the dollar's, you know, feeling a little bit of downside pressure here, and I'm curious to see if stocks do pull back a little bit what is the response in the FX market, because I don't know what it will be.
Yeah, that's very true. Actually, that's very true.
All right.
I do see some nice technical reactions though today. I'm going to go over them now. Blake, can you very briefly tell me what you covered, because I was in a meeting until 10 minutes before I came on the webinar.
Yeah, I covered.
I know you talked about cable. I know that, yeah, because I caught that part.
Yeah, I covered cable, and I talked about euro yen and gold and the Canadian and the peso. So
okay, perfect.
I left it pretty open for you.
Okay, thank you, mate.
All right, guys, have a great one, and good luck today.
Okay. You too, Blake.
Thanks,
hey,
Coach.
How have you been, mate?
Thanks, Delius.
Hey, Steve.
Thanks, guys.
How are you, buddy? Still hot in Athens?
Yeah. It's a hot week in general. I mean, it's not burning hot, but it's hot.
Yeah. Well,
but good thing.
The dollar's hot. Dollar's hot, huh?
That's not a big surprise, right? I mean, we said that we're expecting probably, higher prices from there. The dollar might be hot, but I do see some nice reactions that are really worth mentioning here. One of them is that actually so far the USD yen is reacting to this level of resistance we were looking for. So perhaps this is going to be the level that's going to, produce some kind of a reaction and a retest of the 111.50 area. And at the same time, I know that Blake said he covered euro yen, so I'm not going to actually cover it. I'm just going to show it, and then I'm going to cover the pound yen because I think it's important. As you see, not by accident, euro yen also reacted from a support resistance zone. I didn't draw any of those now. I mean, they were on the chart. So very nice reaction. Looks like a possible evening star formation, up there. So pay attention to this. We have broken above this channel, but this is a nice reaction from this resistance area. And also you can see it here, the 200 daily moving average is also there. So that was actually double confluence of resistances. But the pound yen, and I remember that we covered it a couple of days ago, and I said, what's here? Look where the pound yen got rejected, right? I mean, we were talking about this level and how important this retest of this broken trend line is. That as long as the pound yen is actually below that trend line, I cannot possibly turn bullish. And the only way that I would be turning bullish is if we got rejected from that zone and we came down to this 147.50 zone in a very slow and choppy manner, and then we started moving higher again. But the rejection did happen, and at the same time, we seem so far to be slicing through the 147.50 zone like butter. So if that gets confirmed at the close of the day, I think my first case scenario, which was like a second move higher and the rejection from there and a push to new lows, looks quite a likely interpretation of the market. So I'm going to be even more bearish if we actually confirm on a daily close that this is the kind of technical picture that we have to work with. So I think that the pound yen is definitely one to watch very closely. It looks technically beautiful. And on the other hand, finally, Coach, I mean, I'm wondering, how you haven't been like yelling and cheering, but euro pound is making another attempt to actually break higher. So we're making an effort here. I mean, we've made several attempts in the past, to be honest, and all of them have been rejected. But once again, we're getting very, very close to seeing a break out of this descending channel. Of course, we need to confirm on a daily close, and to be very, very honest, especially in the case that we end up breaking to the upside, personally, I would also want to see a daily close above 89.70, which is above the channel, but this is also a double confluence of resistances. Why? Because it's a horizontal level of resistance, and at the same time, it's this red ascending channel's resistance. So, for me, having to do with a confirmed break to the upside, it's all about the 0.8970 level. We're not far away from that. We're roughly 50 pips away from that. But what I'm trying to say here is that euro pound is worth monitoring.
Put up the weekly, Steve, to show what is potential upside potential.
There it is.
All right. So I'm labeling the high in September of 16.1 and then 2 in June of last year, and that we could get a 3 to new highs. Yeah.
Let's see. Personally, I'm still very skeptical.
But it definitely wore me out.
Oh yeah, it wore everybody out. Trust me.
You know.
Yeah.
Oh well, I'll try. You know, maybe this time. So it probably goes now. So I better put a little something on, or it'll be aggravating to see
Let's
it
see.
go.
I guess we're gonna find out quite soon, right?
Yeah.
On the other hand, EURUSD still trading below this. Keep in mind that my main case scenario remains that this looks nice for another break to the downside, perhaps a push towards 113, and then I would expect some kind of violent reversal, to be honest, because and this bodes very well with my interpretation having to do with the DXY, because I would expect that the DXY is going to break higher from here. As you see, we were also showing it as a triangle several days ago, that perhaps we push lower towards this triangle support once again. We did push lower, but we didn't make it to the triangle support. And then we break out. We're currently actually testing the triangle's resistance. And then we can get a push towards likely the 96.50 area, or even potentially all the way to almost 98, which is the 61.8 fib of from the 2017 early high that we got like within the first 2-3 days of the year, before actually seeing DXY roll over and push to the downside once again. So that would also bode well with a likely push lower in the EURUSD, and then a reversal and a move higher. Now, having to do with the cable, I know that Blake covered it, and something, I have nothing to add here because I'm looking at exactly the same levels. I'm looking at this horizontal support area at 127.60, but above that, it's the confluence of supports of the 61.8 from the post-Brexit low and the 161.8 extension of this little corrective move higher that we had. Thankfully, the fact that I was waiting for a daily close above 133 kept me away from harm, meaning kept me away from actually buying the cable, looking for a move towards 136, which I considered very likely if we actually did close above 133. But obviously, this is not the case. We will have to probably wait for one more low before seeing some kind of a bigger rebound from there. So I don't think that the cable should be faded right here, right now. I think that expecting somewhat of a lower price from here makes sense before looking for a rebound. Now, having to do with the S&P and the Nasdaq, I know that we've shown this a lot of times. Just want to show the 4-hour S&P chart. Perhaps this is some kind of a words as well. 28.17 is the next area of resistance. Still looks strong. There's no question about it. So, as I was explaining yesterday in detail, it makes sense to be cautiously bullish, as long as you keep in mind that we are closer in time to the next big move, which is definitely going to be to the downside, than to the next big move to the upside, which there isn't any chance that it's happening before we see some type of a big pullback or even a crash, right? So the S&P and the indexes can keep pushing higher. There's no question about it, undoubtedly. But don't expect. I mean, prices have already. We were looking at the Nasdaq yesterday. Prices have already increased by 7-fold from the lows. So as you understand, the easy move higher is already done, right? Nasdaq still having a nice possible interpretation of an ascending wedge. You can see it here currently, testing resistance to the 127% extension of the last this little move lower. So this is a confluence of resistances actually, because it's also the 127% extension of this move lower. So a nice confluence of resistances here. Also, let's have a look at Netflix. because you will see that Netflix gapped down seriously yesterday, but then had a very, very nice rally. I was having a conversation yesterday with a friend that is actually trading stocks, and I was telling him, before the market opened, that listen, I think that any rebound towards the 380 to 385, or worst case scenario 395 to close the gap, is probably going to be a godsend, because I don't believe that this kind of a move lower can just be completely ignored and pushed to new highs from there. So I would be guessing that at least one of the stocks, meaning Netflix, should help with some further weakness, because I wouldn't expect that Netflix would move above 395 before seeing at least one more leg to the downside, right? So this is what I would be looking for Netflix. I think from a reward to risk opportunity, selling some here, if it moves higher, selling some at 395, and then putting a stop loss above the highs is probably a damn good idea, right? I mean, from a reward to risk perspective, I think that it's a very, very appealing opportunity. I rarely look at specific stocks, but I thought that it's a good opportunity to have a look at it. Now, the other thing I wanted to show here is the Nikkei. Why? Because the Nikkei earlier today was once again testing the 23,000 resistance area. I don't really need to explain how important this support resistance area has been, because you can simply just have a look at the chart and see that it has acted already several times in the recent past as resistance, once as support, and twice again as resistance. So it's okay and absolutely fine to be looking higher in the Nikkei, but only if it breaks above 23,000. I think that if it breaks above 23,000, then there is actually no real no real strong resistance to find until it can retest the January highs at 24,185. But we do need to clear this resistance zone. Otherwise, we are in danger of getting rejected once more. So, I'm keeping a very close eye to the Nikkei. And it's not by accident that at the same time, we find both the Nikkei and the USD yen testing resistance. So keep that in mind. Now, having to do with, I'm going to have a fast look at the DAX and the FTSE. The DAX finally cleared the 12,600 area. I had already drawn this during the weekend. We were still trapped within this 200 handle range, 12,400, 12,600. I said that a break above 12,600 should definitely come up and retest 12,800 for multiple reasons. This was a gap that was filled. You can see it here because this is continuous. This is also the confluence of the 61.8 of the last move lower and the 200 daily moving average. So, quite an important resistance area, and I'm curious to see what's going to happen from here. On the other hand, the FTSE is also testing resistance. Which resistance is this? It's this possible bull flag resistance. So once again, as you see, we've tested this channel's resistance. It's already like 2, 3, like 4 times during the past like 7, 8 trading days. I do think that a break higher from here will constitute a bullish development, and will likely indicate the end of this corrective move lower, which likely has already ended with an A, B, C. So it has likely already ended, but for us to have confirmation that it actually ended in this low, we do need to see a daily close, ideally I would say above 7,700. Okay, then I'm going to feel a lot more confident that there is more upside. Obviously, continued pound weakness is going to be a tailwind in for the FTSE, right? I mean, it's not the only thing required for the FTSE to push higher. I mean, the FTSE could potentially move lower even with pound depreciating, but definitely a depreciation of the pound is a tailwind for the FTSE. So, keep that in mind as well. Having to do with crude, let me go back to the 4-hour chart because I was showing it yesterday. I was targeting 68. We did find 68, but the way we have been consolidating after finding the 68 level doesn't convince me that this was the low. I mean, I don't know. It looks like it wants to go even lower from here. So I would not be buying it yet. No way. No way. Still looks heavy. Still looks heavy. So, I don't think we are about to see a rebound, imminently at least. Now, having to do with the metals, first of all, let me also reiterate what Blake said briefly yesterday. If you go to ForexAnalytix, this is a free section of ForexAnalytix, actually. There it is. So if you go to ForexAnalytix, there is a link up here, blog. You can click on it, and you'll find yourself in our blog section. It's a free section for everybody. Greg uploaded a very nice blog post here having to do with the outlook of gold from an elite wave perspective. I think it's quite clear. I think it's worth reading. It's a small article, very useful, very well written, and we all know that Greg has a very good understanding of the markets. So I suggest you have a look at it. So I'm not going to add much for gold. I can just tell you that gold is also penetrating. Not only it has penetrated through this ascending trend line support, which I warned you it's going to do, because I kept telling you that, listen, gold is very, very heavy. I mean, it is holding support, but it's doing so in a manner that doesn't really make me believe that it's about to rebound. It's penetrating through. I think that the next area of support is at 1,200. And why do I think that's the case? Because that's the 127% extension of the last move higher. So I don't see any other significant support area until we get there, right? So also the RSI is confirming the breakdown, because we had a temporary divergence. And having to do with silver, as you see and as expected, we broke below this long-term triangle. We came up, we retested it. We are moving lower once again. Next area of support is the 78.6% fib at 1483. So obviously silver doesn't look good. I need to add here that platinum got rejected after retesting, backtesting this broken wedges support as resistance. It's pushing to the lows once again. If I zoom out, you can see that this is a very, very broken, very, very broken chart, right? Just look how heavy it is. Just look how bearish it's been, right? And the next area of support is roughly at 750, which was actually the 2008 low. So an extremely bearish chart. I mean, it made an attempt to rebound, but it failed in a spectacular way. Now, having to do with palladium, palladium did hit my next target. You remember I was viewing this as a triangle. I said that this looks to me like a triangle, and this looks to me like it's going to fail and move lower. I had said sometime before that I have a very bearish interpretation having to do with from an elite wave perspective about what we're seeing here. And this seems to be the case. I mean, there is a bearish interpretation, and we're testing currently 900 area of support. If this area breaks, palladium could be moving next to like 830, which is like $70 lower from where we are, right? So keep that in mind as well. Copper, on the other hand, once again testing this confluence of supports, but in all honesty, it doesn't look good. I mean, I don't see anything here that will be telling me that we might actually see a rebound. I do believe that it's going to fulfill the double top target, and that double top target is pointing to 256 down here. You can see it marked. So I think you should keep looking lower for copper as well. Let's have a look at a few questions. I think I went through the vast majority of the things that I had in mind. Very briefly, let me say that just very briefly, Aussie, this looks to me like another consolidation. And given the prior move, obviously we're talking about a bearish consolidation. So a break below the 73.25 area is going to extend lower. And the same deal here with Kiwi. As long as Kiwi remains below 68.70, I think that it's in danger of breaking below this trend line. You can see this red trend line, which currently passes roughly from 67 cents. If that happens, I have a confluence of targets at 65 cents, just above 65 cents. So I do think that there is a potential for at least another 200 pips to the downside. So keep that in mind. Let me have a look at questions. Dale, do we have a guest today? Michael, I did cover Gappy, and I actually covered Gappy quite extensively. I can very briefly show it to you again, telling you that we got confirmation of what I was saying the day before yesterday, that this was likely one more push higher and another retest of this broken trend line, and we're likely moving lower. I think that a daily close up below 147.50 is going to increase those probabilities. And thank you. I mentioned it yesterday or the day before yesterday, and I have a question that reminds me of mentioning it again because I wanted to talk about it. The question comes from Marius, and the question is about Euro Swiss, and I have to tell you that Euro Swiss seems to be accelerating lower, which is, just look at this, it's perfect. I mean, I drew this several days ago when we were there. I haven't touched it yet. I mean, it's perfect. A perfect retest of this confluence of resistances, the pennant resistance, this horizontal area of support resistance, an ABC correction, and I do think that we're moving lower in the Euro Swiss. A break below this pennant support is going to put the last nail in the coffin, most probably, from a technical perspective.
Great analysis, Mr. Confirmation.
Thank you. So I think it's time now that we are decently confident that that might be happening. It's time for us to make an extension and see that even an ABC would target down to, what is this, 110.70. So there is a very optimistic target to the downside, all the way down there actually. So I think that Euro Swiss is looking like a very nice technical trade. We are getting very close to confirming a breakdown. Do we have an interview today, Coach? Dale?
Yes, we do, Steve, we do. It's
Okay.
at Waterman on Twitter. But yeah, I think it's here as well. I think I saw him on the chat. So as soon as Dale's back, I think we can kick it off.
Perfect. Dale, I think I covered more or less everything. I was on a roll. So if you're ready and you want to start your interview, I know it's 1 minute earlier, but I don't find any problems with that. Okay, there's a question about NOK. Let me cover that until USD NOK. There it is. So USD NOK, two possible interpretations. I also wrote it during the weekend. One of them a head and shoulders formation. The other one a consolidation that's going to break higher. I said multiple times that I do believe in the interpretation that the USD NOK has more upside, and only a break below 8 would actually turn me bearish. 820 is a very, very, very important area of resistance. I think that if we break above 820, you should be looking for a move higher towards the 840 area. So we're getting close to resistance. Obviously, buying it at resistance makes no sense, but buying a breakout from 810.20 makes sense. Now, on the other hand, if we get rejected from 820 and move, promptly down to 8 and we break below it, fine. Otherwise, if we don't do that immediately, I will stop liking the head and shoulders interpretation anyhow, and that is because we have already started losing the sense of symmetry in this head and shoulders formation, this potential head and shoulders formation. Okay, so watch closely 820. We're close to that. I think that a break higher and a likely continuation lower for crude, which in the short term at least looks very likely having to do with the structure. I mean, it seems to be consolidating once again and wanting to break lower again. I think that might also bring this breakout from the 820. So, Coach, are you ready?
Yeah, buddy.
Okay, enjoy.
Thanks, Steve. You gave me some clarity. You confirmation guy, you. All right, he's gone. All right.
I'm here. Okay. Thank you, mate.
I wish if I ever get confirmed again in the church, I'm going to have you have Mr. Confirmation in the pews. Okay,
I'm the least. I'm the least.
Well, I know.
Likely person to help you with church issues.
All right. Well, I just want to see if the holy water boils when you walk in. So anyway, here we go.
Actually, I tried it because I was baptized as a child on Sunday, and trust me, nothing happened, which is amazing. Actually, I mean, there was no holy water boiling or whatever else happening, like earthquakes.
See, even though you don't believe, he still loves you. All right, buddy. That's the end of my.
If that's the case, I'm a good person, so it doesn't matter.
There you go. I agree with that. So, Andy, I'm going to make you the presenter. I hope you have some type of microphone or some audio. Really don't do written interviews here. I guess I didn't prep you properly, but I've just passed you the controls so we could see your screen, and hopefully I could hear you. And I believe that Andy Grove is your Americanized name, different than Wow. So I see your screen. Do you have any, I see your screen. Do you have any audio?
We can see your screen, but we can't hear you, although you're unmuted from what I see. So make sure in the panel, in the GoToWebinar panel, there is a section called audio. If you expand that section called audio.
All right, I think we have a problem with this interview, and we're going to have to reschedule it. I thought that's what you said on Twitter, that you didn't have a microphone. So I don't know what kind of interviews you've done in the past, but interviews usually involve a conversation, written ones. Okay. Well, perhaps you get a microphone and we try this. Okay, we tried this another time, Andy, because I don't see how we could really get anything really accomplished. So thanks for showing up tomorrow. I know the guys are going to like who we have here. Samantha LeDuc will be with us for investing.com. Thursdays, you warned me. Okay, today's the first day I didn't think you had a microphone. Okay, that you told me you didn't have a mic. But it's okay. I still like you. You're my trading warrior brother, and perhaps we'll try this another time. So guys, good luck the rest of the day, and we'll see you all tomorrow. Anything you want to add, Steve, besides goodbye or still? See everyone.
One more thing.
Go ahead.
They shouldn't forget that, for anything they want having to do with brokers, Forest Park FX, they can find them through the reimbursement program link on our webpage. They can help you, even if you're not a ForexAnalytix subscriber. If you are a ForexAnalytix subscriber, you can substitute your subscription in cooperation with, Forest Park FX, Trent and Justin, in any way and anyhow. They can definitely help you make the right decision having to do with selecting the right brokerage firm for you.
And there's also no law against having more than one account. I mean, sometimes you don't know what you have until you compare it to another. So a good idea to spread capital around anyway. So give them a call and see what their preferred choice would be for you, even if you're not having a problem, but you'd like to have some diversification between accounts. Okay, so Trent, Justin, great guys. Send them an email and you get a free consultation with them. So thank you, Steve, Stell, Blake, all subscribers. See you in the member chat for today's action during the dog days of summer. Adios, and remember, don't just count your, don't count your pips, just count your pips. Don't do that. Count your blessings. See everyone tomorrow. Adios.